As of the time of recording, Tesla's stock was trading near $200, having recently risen beyond its 52-week low. But what has been happening with the automaker, particularly with regard to the value of its shares? It is the hope of investors that the stock of Tesla will keep rising and eventually settle at a price that accurately reflects the company's fundamentals. Welcome back to Everything Tesla Stock, everyone. Tesla's stock appears to be reacting favorably to recent news, including Citibank raising its recommendation on the business and Tesla CEO Elon Musk naming South Korea as a leading contender for a new facility in Asia. Following weeks of trading at all-time lows, Tesla stock has been steadily rising on the chart in the last few days. Proponents of Tesla stock, such as Ross Gerber and Gary Black, have hinted to potential future increases in the company's stock price. What potential catalysts can the Tesla stock encounter in the upcoming months? And did investors who sold their shares at a discount err in doing so? In this video, we're going to find out. But before we do, remember to hit the like, subscribe, and switch on notifications buttons if you enjoy this kind of stuff so you can be updated on everything Tesla has going on. Compared to the S&P 500's 6.6% gain, Tesla's stock has dropped 20% in the last month alone. Following Elon Musk's large stock sales, there were some declines in Tesla's shares. Musk sold an additional $3.95 billion worth of Tesla shares this month, following the liquidation of part of those shares to fund his Twitter deal earlier in the month. He said that this was an attempt to keep the social media company afloat. Mike Lee, a Citi analyst, recently changed his rating on Tesla from sell to neutral, giving multiple justifications for the valuation-based change. The analysis just sent out a message to customers stating that he thought the year-to-date decline had equalized the risk and return in the near term. Some of the previous Big Ten expectations that we disagreed with are out of stock, given that the multiple is projected to contract to about 30 times EPS at 2023, he stated. Although we have reduced our near-term EPS predictions as a result of our most recent model update, we are still slightly over consensus for EPS in the fourth quarter of 2024. He added that as capacity increases, economic and competitive concerns would probably continue to be a burden, adding that Tesla's long-term competitive position will probably improve in a hard landing scenario and may be further strengthened by the IRA, Inflation Reduction Act. Both the $7,500 IRA tax credit and the battery credits will probably help Tesla. Similar to this, the Fed might someday second-guess its choice to continue raising interest rates in an effort to combat inflation. The likelihood of a U.S. recession in the upcoming year has increased by about 50%, according to a recent briefing by staff economists from the Federal Reserve. The reasons given were weaker consumer spending, uncertainties related to the global economy, and potential interest rate hikes. The prediction presented in the minutes of the Federal Open Market Committee meeting held on November 1 to 2 states that the likelihood of the economy going into recession at some point in the upcoming year is expected to be equal to the chance that it won't. Since the central bank started hiking rates in March, this was the first warning of that kind. The Federal Reserve raised the benchmark federal funds rate by 75 basis points for the fourth time in a row, bringing it to a range of 3.75% to 4%. By steadily raising interest rates, the Fed may come to the realization that this might be contributing to a recession. The stock market will probably see improved performance from a number of stocks now that interest rates are controlled. Since 2016, Musk has assured Tesla's patrons and investors that the company will be able to transform its cars into self-driving cars that can function as robo-taxis. Users of Tesla's Autopilot, Advanced Autopilot, FSD, and FSD beta systems are expected to always be prepared to take over their driving responsibilities, even though the company has not yet reached this milestone. The carmaker is working very hard to get this technology integrated into its vehicles in real time. Longtime Tesla bull Gary Black recently tweeted his reasons for thinking that SSD will help Tesla post a strong revenue number in the fourth quarter of current year. He added, "I would anticipate that when FSD version 11 is widely released in the United States by year's end, Tesla will recognize a one-time deferred revenue of approximately $1 billion in Q4. The majority of analysts will pull it out of EPS all at once. When EV consumers are aware that they can utilize FSD right away after purchase, the ongoing FSD tech rate may rise. Since SSD became accessible, Tesla is estimated to have sold 400,000 FSD bundles at an average price of $9,000. With 330K sales in the US and 40% unamortized deferred revenue, there might be a release of $1.1 billion in deferred revenue. According to Black, the greater effect might come from an increase in FSD take rates following the general release of version 11 and the rapid availability of it for new FSD purchasers. He continued by saying that the US FSD take rate is currently 15%, whereas the global take rate is roughly 8%. Therefore, 2023 EPS would grow by about 15 cents, with a 25% increase in the global take rate. Investor in Tesla shares Ross Gerber recently revealed that building the Cybertruck is the easiest method to quadruple Tesla stock. According to Gerber, this will significantly alter the landscape for Tesla in the upcoming year. Furthermore, it would mean that no buybacks or dividends would be required. In July, Musk disclosed that the Austin, Texas-based Tesla factory would begin producing this futuristic vehicle in the middle of 2023. According to Musk, Tesla plans to start manufacturing these vehicles in the middle of next year, with owner deliveries of the first few minutes starting in June or July. Musk also disclosed some of the Cybertruck's additional characteristics in more recent news. He says Cybertruck will be watertight enough to act as a boat for a short while and that, provided the waves are not too rough, it will be able to cross rivers, lakes, and even the edge of the ocean. Apart from the Cybertruck, other projects in development include the Tesla Semi and the updated supercar Roadster. It is anticipated that the Semi will start to be produced by December of this year. Undoubtedly, though, a lot might alter before the following year. According to Personnel, Dan Ives thinks that Tesla investors will have a very anxious few months since they will continue to be the target of Musk's interactions on Twitter. Even though Wedbush Analysis kept Tesla shares at $250 with an outperform rating, he had informed investors that there was still a Twitter overhang. Dan Ives claims that the Twitter Circus Act is still going on, with Musk concentrating on improving the site while generating controversy every day. The worry that Musk may sell more Tesla stock to fund the Twitter transaction, brand erosion, and Musk's association with Twitter, that is, his attention being entirely focused on Twitter rather than Tesla, are the three primary causes of the overhang, he continued. He went on to say that until deliveries start in January and investors get a clearer picture of the production and delivery trajectory for 2023, the price of Tesla shares is probably going to stay low. Earlier this month, Ives had taken Tesla shares off of Web. The greatest ideas from U.S. Similarly, Adam Jones, an analyst at Morgan Stanley, feels that Musk ought to address these issues on Twitter. To break the negative attitude surrounding the Twitter issue and reassure investors who are worried about Twitter, he believes that some sort of announcement is necessary. He went on to say that some investors and tattoo analysts are concerned about possible negative effects for the electric vehicle manufacturer, saying that the Twitter transaction may harm business relationships, political connections, and capital market support, in addition to potentially harming consumer demand for Tesla. Musk's takeover of Twitter is still the subject of much debate, but there might be a more effective method to allay people's worries. If Hai is the new Twitter CEO, he has previously said that he wants to put the company on a path to generate more substantial money. Subsequently, he is probably going to give it to someone else. Similarly, Twitter may allay investor concerns if it hits a cash flow break-even point. At their first meeting, Musk informed the Twitter staff that the company needed to increase its cash flow expenditures. If it doesn't, he added, there would be a significant cash flow deficit, and bankruptcy is a real possibility. According to Gary Black, Twitter's worries should subside and investors should be able to concentrate more on Tesla's fundamentals if the company can achieve a cash flow break-even point with a 33% decrease in ad spending and a 50% drop in cash costs and expenses. What other catalysts do you anticipate driving up the price of Tesla's stock in the future? Please share your thoughts in the space provided below. If you'd like to learn more about Tesla's recent activities, click the following video to view on your screen. Talk to you there.